Hello and welcome to our audience. You're joining myself, Vanessa Malloy, Head of the Luxembourg Office Investment Fund Practice, and I'm joined by my colleague Pierre-Luc Wolff, Head of the Luxembourg Tax Practice. You're joining us from a dreary and rainy Luxembourg, but we do have something that may brighten your day in the form of the enhanced Luxembourg carry interest regime, which is rather interesting. Let's get straight into it. As from the 1st of January this year, the new tax regime for carried interest has become effective. The first question to you, Pierre-Luc, on this topic is really why was this reform necessary?
The old carried interest regime had its limits. Only individuals who became tax resident between 2013 and 2018 could benefit from the regime. The benefit was capped at 10 years and only employees of the fund manager qualified. Since 2018, no new individuals could benefit. So a modernized permanent regime was needed to make Luxembourg competitive.
You touch on an important point regarding Luxembourg being competitive. Would you say that the modernization is really part of a much broader strategy to try and attract and retain talent in Luxembourg?
Yes, Luxembourg wants to strengthen its position as an attractive financial center. Beyond the carried interest enhancement, Luxembourg has also revamped its impatriate regime. It introduced a profit sharing scheme, and for startups, there is now an interesting new tax regime applicable to stock options.
It's also my understanding that the new carried regime really distinguishes between two types of regimes. Can you walk us through these in simple terms?
Yes, and this is one of the most important aspects of the new law, which creates two distinct categories of carried interest. The first category is the so called contractual carry, which is a simpler of the two. With the contractual carry, the individual receives a share of the fund's profit through the carry payment without needing to make any actual payment or investment into the fund. It is essentially a performance based bonus that rewards the individuals. The tax treatment of the contractual carry is very favorable. Only one quarter of the normal income tax rate applies, which results in an effective tax rate of approximately 11.5%.
That's substantially lower than normally applicable if you're just being taxed on a normal bonus. So that must really sound favorable to a number of people in Luxembourg. It would also be helpful if you could explain the second type of carry in more detail.
Sure. The second category is participation carry, which some people also refer to as a carried invest. This is quite different from the contractual carry because here the manager actually pays money to acquire the right to share in the fund's profit through the carry distribution.
As you know, often the manager and key individuals involved in the fund are required to put skin in the game by co investing in the fund and actually investing as an investor. This is often a requirement of investors when they themselves are seeking to make an investment in the fund. So, when we talk about this regime, are we talking about just the carry itself or the co-investment made by the individuals to meet the requirements of the investors?
It's a great question. To clarify, we are truly discussing the taxation of the carry distribution and not the traditional co invest by key individuals.
And to benefit from this participation carry regime, does the individual or key person have to actually pay for their carry, or can it be a nominal amount?
There is no minimum euro amount required, and you do not need to invest a specific percentage of the fund's capital to qualify for the participation carry. Here's a key distinction between the two categories is how you acquire the carried interest and not how much you invest. With contractual carry, you simply receive a contractual right without paying any money, whereas with the participation carry, you pay money to purchase your right to share in the profits. This means that even a relatively small investment can qualify for the tax free treatment as long as the investment is real and genuine. The authorities will want to see that it's a true investment and not just a nominal amount designed to abuse the regime.
This regime sounds truly attractive and really matches what happens in practice with the investment for the carry. I think that it's also important just to clarify, are there any other conditions applicable to benefit from this type of regime?
Yes, there are two conditions that must be satisfied to benefit from the regime. First, the manager must hold the investment for at least 6 months. And second, it must own no more than 10% of the fund's capital. If you meet both of these conditions, then there is a zero Luxembourg tax on your carried interest. The profits are completely tax-free, which is a remarkable benefit.
For clarification purposes, can you just confirm that it's a zero tax rate applicable to the carry? This
That-
kind of regime is applicable?
Yes, that's correct. Not taxable at all. Luxembourg is offering one of the most competitive carried interest regimes in Europe, which is exactly what the government intended when designing these reforms.
So, if we could just take a step back and think about a traditional carry vehicle used in Luxembourg, often the carry is structured through a transparent special limited partnership, which would include terms such as good leaver, bad leaver, and also the ability to roll up carry for future joiners. Would this still work for those individuals holding their carry through a transparent vehicle like the special limited partnership?
Yes, in most cases, and as you stated, participation carry is structured through a dedicated SPV, such as Luxembourg Special Limited Partnership, rather than being held directly in the manager personal name. This provides additional flexibility and structuring option on aspects such as clawback. The bottom line, I think, for our listener is this. If you are able to invest some of your own money into the carry, even a relatively small amount, you could potentially pay zero tax on your profits. If you cannot or do not wish to make that investment, then with the contractual carry, you will pay approximately 11.5%, which is still a very favorable rate.
I also understand that the new regime has expanded on the types of individuals that can actually benefit from this regime, which really makes it attractive. Could you just elaborate on who may benefit from the regime?
Yes, and this is one of the most significant improvement of the new regime, because under the old rules, the scope of eligible beneficiaries was very restrictive. Now, the new regime covers all individuals who are actively involved in the management of an IF, whether that involvement is direct or indirect.
Could you maybe just provide some practical examples? Like, for example, someone just doing administrative services in the AIFM, would they maybe qualify for this regime?
Likely not. A person only providing administrative services will not qualify, but the regime will include employees of the fund manager and management companies, partners, directors of these entities, people who provide advisory services to the fund, whether directly or through a separate company. However, they do not need to be active in the management of the fund. The independent board members of the fund itself are also included, along with shareholders of management companies, and other non-employees who receive carried interest entitlements are also covered. So as you can see, the scope of who can benefit is much wider than before, which really reflects the reality of how modern fund management actually works.
Just looking at maybe holding the carry through an opaque structure. If you hold, for example, through a Luxembourg corporate vehicle, would you still have the same options on the participation carry?
Yes, this is a very important point that managers need to understand clearly. The regime applies only to individuals and not to companies. If you hold your carried interest through a company, then it itself does not benefit from the preferential tax treatment. To qualify for the regime, you must be an individual person and you must be directly or indirectly involved in active management of the fund.
So, to close out on who may benefit from this new regime, considering this is a Luxembourg regime, I would think it's only applicable for people that are tax residents in Luxembourg. Could you just clarify exactly how residency interplays with benefiting from the regime?
Yes, so this is a fundamental requirement of the new regime. You must be tax resident in Luxembourg, and this residency must be established both under Luxembourg domestic law and the applicable double tax treaty. So if you are considering relocating to Luxembourg to take advantage of this regime, you need to plan very carefully and make absolutely sure that you will be treated as a Luxembourg tax resident under all the relevant rules.
So we've looked now at a number of key elements to be able to qualify. I think it's important that we look at the fund itself and how the fund is structured and how the carry is structured. So as you know, typically there's either the EU model or the US model, with the EU model being looking at the performance of the fund over the whole life of the fund and at the end of the fund, whereas the US model is more on a deal by deal basis. So taking into account the whole fund carry model and the US model, would both of these be able to benefit from the regime?
Yes, both models can be accommodated under the new regime. The old regime required that the investor recovered all of their contributed capital before any carried interest could be paid to manager. So this approach worked well in the past for traditional wall of fund waterfall models, but it did not accommodate deal by deal carry arrangements, which have become increasingly common.
So while we're on the point on how the fund is structured, as you know, promoters of funds have the option of using a opaque structure, a corporate structure, or tax transparent structure. Is there really a difference on how the fund is structured for the purpose of benefiting for this carry?
The legal form of the fund does not affect whether the regime applies or not. Whether the fund is structured as a partnership, company, or some other legal form, the preferential rules can still apply.
For listeners who are working in the fund industry who wish to utilize this regime, what would you recommend they do from a practical point of view?
I would suggest three practical steps for people in this situation. First, you should look at your existing carried interest arrangement and assess how they might be affected by the new regime. Second, you should review your fund documentation carefully, including the LPA and the waterfall provision. You need to make sure these documents align with the requirements of the new regime and allow you to take full advantage of the benefits available. And third, if you are thinking about relocating to Luxembourg to benefit from this regime, you need to plan the move very carefully. You must establish proper tax residency under both Luxembourg domestic law and any applicable tax treaty.
So, Pierre-Luc, from your side, are there any final thoughts that you think you should highlight?
For me, Luxembourg is sending a very clear message to the alternative investment industry with this reform. The message is that Luxembourg is open for business and that the government is actively listening to what the market needs and wants. This new carried interest regime is permanent, unlike the previous time limited regime, and is designed to be flexible enough to accommodate different fund structure and arrangements. When you combine this with all the other tax reforms that have been introduced in Luxembourg, Luxembourg is now one of the most competitive jurisdictions in the world for carried interest. Whether you are a fund manager, a director, an advisor, or board member, there are real opportunities available if you structure things correctly and take proper advice.
Excellent. Thank you so much for your insight. So, this brings us to an end of our podcast, and we hope that you have found it informative. On behalf of myself and Pierre-Luc, I would like to thank you for joining us today and listening to our podcast. If you have any questions regarding Luxembourg and the alternative investment funds available in Luxembourg, as well as the carry regime, please do not hesitate to contact either myself or Pierre-Luc. Our details are available on the Harneys website.